Hello everyone, and thank you for joining us for today's presentation as part of the Industry Insight webinar series. The topic this time is Advanced Principles of Legal Accounting. Speaking today will be Erica Bursler and Elizabeth Vera of Cosmolex. Erica Bursler is the Director of Strategic Communications at Cosmolex, developers of an all-in-one cloud-based legal practice management, billing, and trust accounting system specifically designed for solo and small firms. Erica's degree is in business administration, and she has over 6 years of experience in the legal software industry, catering to the specialized technology needs of small to mid-sized law firms. Erica has given numerous presentations across the country on legal technologies such as law practice technology management, cloud computing, and legal billing and trust accounting compliance. Elizabeth is a certified bookkeeper and QuickBooks Pro advisor. She has over 11 years of experience consulting and managing the finances for companies across multiple industries ranging from the entertainment to marketing and legal firms. As the founder of her own bookkeeping and accounting firm, Elizabeth and her team offered clients complete bookkeeping services, QuickBooks Pro Advisor consulting services, QuickBooks training and customization, QuickBooks data server maintenance, and payroll services. Today, Elizabeth assists law firms across the United States and Canada to migrate their data from legacy accounting and practice management software to legal-specific accounting solution. The presentation today will be followed by a Q&A. Please enter your questions into the question box in the webinar panel on the right side of your screen. All questions will be addressed at the end of the presentation. We're recording this webinar and we'll be sending a video and a follow-up email in a few days. We'll also post a video on our blog at www.lawtechnologytoday.org. Thank you all for joining us. We'll now begin the webinar.
Great, thank you so much. So to start with our agenda of what we will be covering today, we'll first talk about what is legal accounting, how it's a little different from any other business. And then we're going to be talking about the 3 advanced legal accounting principles. We have picked out specifically 3 in which Liz will help us to define and understand these various concepts, but also we're going to tie in how each principle does relate to law firms specifically and things to look out for. And lastly is how can tools help you to master them? Accounting does involve a lot of numbers, tracking, and also reporting, and compliance does get wrapped up in all of that as well. So having the right tools in place will help to ensure accuracy and also to give your firm a little bit of peace of mind. Just a little bit of disclaimer at the very start, this webinar is kind of meant to be general knowledge and education on these principles. Every law firm is a bit different. The way you do your accounting, though in general is the same, might have unique requirements for your type of firm. So it is important to consult your accountant or bookkeeper to sort out what would be the best fit for your firm. So I want to make sure to say that up front. And also I will be using Cosmolex to demonstrate some of these examples just to provide a visual. And Cosmolex is an all-in-one practice management solution, which also includes legal accounting, which of course is our topic today. So what exactly is legal accounting? And we will definitely try our best to present this material as simply as possible because of course we recognize that lawyers are not accountants and accounting is often something quite neglected in law firms, and this might be something very new to you. So to start, we like to cover at least the basics. Legal accounting as a whole comprises of these 3 points. First is business accounting. That is your back office accounting. That is your income, your expenses. That's how you can develop your profit and loss and your balance sheet and your end of year reporting, which is really common by all businesses, but there are some unique requirements, which are the following 2 points that are very specialized for law firms. One of which being matter cost and income accounting. How are you posting client costs that eventually need to be reimbursed? And then the reimbursement of those, how is that being posted and is it being done properly? And then the last portion is fee advances and retainer accounting. That very often, it's the management of client funds, which very often falls into the trust accounting realm of things. And you have the compliance aspect. You might be managing funds from kind of an escrow perspective or personal injury perspective where it's being dispersed to other parties, but also those that may be held on to just for a retainer. And today we're going to be focusing on mainly the first 2 points because those are the areas which immediately impact your firm's bottom line. Now, though we're discussing accounting today, you will notice that a lot of the concepts that we cover also have a direct relationship to your billing because that is how you earn your income. You bill your clients and they pay you, and that eventually has to be reflected on your accounting reports. Considering that many law firms actually use separate tools or separate records for each, one for billing and one for accounting, there are a lot of additional struggles as well that can come along, like you may be doing duplicate data entry for your costs or for your invoice payments. Crucial items might fall through. Maybe you're not getting reimbursed for your costs, or you're recording your income improperly. And then overall accuracy. Of course, when you're entering things in multiple places at different times, accuracy can definitely be affected. So we'll touch upon those points throughout as we talk about these three topics today. But for now, I'm going to pass it on to Liz to discuss our first principle. Liz?
Thank you, Erica. And yeah, definitely our first principle is cost accounting, and that's definitely it's summarized in these 3 bullet points, right? Tracking costs based on a project job level in order to ensure profitability, and direct cost, and then asset versus expenses. So let's talk a bit about the first one, right? Cost accounting is definitely most important when you're tracking costs based on either a job or a project, so you can get to the bottom line rather quickly. This method helps you rise above the challenges what is entailed in a business. So however, you have to make sure that you are tracking the right aspects of your business. That being said, let's talk a bit about the following bullet point, which is indirect costs. So what is indirect costs? Well, generally it's itemized overhead, photocopies, printing expenses that you have for your business. And if we were to set an example, for example, we can talk about a flower shop that has indirect costs, such as office supplies, any brochures, postage, etc. This will form part of their overhead expenses. Most flower shops track this either on a job level or on a project level if they were supplying a service for a funeral or a wedding. Every business is a bit different as to how they pass these indirect costs. Some decide to itemize it, to charge upfront, or they decide to track it and update their service fee in the end. So that is one way to track indirect costs. Now, direct cost, right, is definitely something that's directly linked to the job or the project. Most general businesses know this as cost of goods sold. So if we were to give a brief example of this, taking that same flower shop, we can talk about the same wedding service that they're providing, but now they have to be more specific as to what's included in the service. Like, for example, if they're including brochures for the wedding or table cards, individual name cards, this will be categorized as a direct cost. And because it's directly linked to this job, they want to keep a close eye on how they track this expense, because they want to make sure that their out-of-pocket expenses are covered. So let's cover the last one, is asset versus expenses. So this is an expense that may not be reimbursed for an extended period of time, or possibly not at all. Now, most businesses don't really utilize their assets accounts to track expense all in one. This is very unique for law firms, and that's something that Erica will touch base on a little later in the presentation. Let's go to expense. Expense is definitely something that you can track and get reimbursed for in a future aspect, right? Like, for example, you want to track reimbursable expenses over a short period of time, like if an accounting firm would say, okay, I'm going to give you services for the software that I'm providing you, or tax filings. You want to make sure that when you invoice your client for this, you're including those expenses, and therefore you get reimbursed for them. Erica?
So that explains the general concept of trust accounting, just so you understand from an accounting principle component. Now let's take it to the legal or law firm arena and how that could affect your business specifically. So law firms, like some businesses, often pay for client costs out of pocket, and then they need to be reimbursed. That's a fairly common scenario in law firms. And these costs have to be properly tracked so that you can actually recover that, that cost, and it doesn't affect your income, because very often when those items do get dropped, it can affect your overall income, and that ends up going down. So let's talk about, we mentioned direct and indirect costs. So for law firms, these costs are commonly known as hard or soft costs. Soft costs is that indirect cost that Liz talked about. That's the overhead. Now, as she said, with businesses, it's very different. Same with law firms. You choose how you want to pass that through. Some firms say, you know what, I'm going to absorb the cost. I'm not going to charge my client. Some want to itemize that indirect cost through, like if I'm doing printing for somebody, I want to let them know that I printed out 20 pages and therefore it equals this amount, and it's itemized. Some say, you know what, I don't want to be bothered with itemizing, but I add a 5% charge to every invoice to say this is covering my overhead. So the first step is to figure out how you want to bill your overhead, and then understand that that is either a soft cost, which is itemized, or maybe it's just tacked onto an invoice. For hard costs, those are those client costs directly linked to a specific transaction. Like you're going to the court today and you need to file a document and there's a filing fee associated to John Smith's case. That's a hard or direct cost. And that way the expense is actually linked directly to a particular transaction. And what this really comes down to, which I'll show you in a moment, is how those costs end up posted on your general ledger. Then you have non-reimbursable costs. That is if you are absorbing that cost. You still want to track it, even if you choose to, cover all of your printing and photocopies. You still want to obviously track it because you want to see the amount of those costs over time, so you can ensure it's not getting out of control. If you're printing, thousands and thousands of pages for a particular client, and you're not charging them for it, maybe that should be revised because of the volume. And that's something you could tell just by tracking it, but not necessarily billing them for it. Now, from a general ledger perspective, so we know the two types of costs, but how are they posted on the general ledger? And this is unique to law firms, the terms of reimbursable client costs and advanced client costs. Reimbursable client costs is the expense example that Liz gave prior. This is typically an expense where the cost is posted to the expense account and the reimbursement is posted to an associated income account. So this is usually used when the expenses are planned to be reimbursed in a reasonable amount of time. So you don't mind recording the expense right away because you do expect to be reimbursed fairly shortly. This is most commonly for hourly or maybe short-term flat fee type of cases. Advanced client costs, this is that asset account, and it's not commonly used for other businesses, as Liz said, but it is crucial in many practice areas. Typically, if you have a flat or contingency case in which you'll likely not get reimbursed for a long period of time, if ever, especially with contingency, it can go on for years and years, you're booking all these costs, and if you don't win the case, you might not get reimbursed for them. It's a possibility. So for that reason, many firms like to record these as an asset known as advanced client costs because they don't want to report as an expense just yet, especially if they might not even get reimbursed for it. Because if you record it as an expense right away, that factors into your tax reporting. Same thing, of course, happens with your income on the flip side. So if it's not expected back anytime soon, a lot of law firms choose the route of asset. Now for what you should do, because I get this question, I do this type of work, you might have hourly, flat, and contingency type of cases. It may differ based on your type of your case. Some cases might need to be reported as reimbursable client costs and some as advanced client costs. This is where you definitely want to consult your accountant. You want to take factors into like your practice area. Maybe there's certain regulations with that. Maybe you're doing a flat fee billing, but you're actually billing them a monthly flat fee, so you expect to be reimbursed quicker. That all factors into it, but you want to at least be aware of the concepts going forward. And probably one of the biggest issues with costs and why it's so important for law firms to do this properly is often you'll pay the cost, but actually not bill it or record it properly. This is actually really common. From an accounting perspective, those costs are covered, but it's very often lost when being translated to the billing record to make sure it gets billed to the client. And like I said before, that's completely lost income out of the firm if you're not actually getting reimbursed for the cost that you pay. So we're going to go through a quick example as to how costs get posted and how they get reimbursed. So here's a visual to show how in an hourly matter that I'm choosing to post as an expense account, so reimbursable client costs on the general ledger. Here, you'll see that I have the first two items, filing fees and transcription fees. Those are direct or hard costs. It's related specifically to this matter. I need to be reimbursed specifically, so it's being booked as a reimbursable client cost, which is an expense account. The third item on the list is photocopying. That's an example of a soft cost. It's an indirect cost to my client. So I enter it as a soft cost, which is different, and then it gets booked to a different general ledger account, which is indirect reimbursable client cost. So you see, when I do my accounting reports, I'll be able to see the difference between those that are overhead that I'm passing through and those that are specifically matter-related costs. The last item here is an example of a non-reimbursable cost. Maybe I'm deciding the firm's going to absorb the cost of the attorney's mileage to and from the client. They're not going to bill that to the client themselves. That, if you want to track it, for good records, you would enter it as a non-reimbursable client cost, and therefore it won't get billed to your client, but it's listed as such on your general ledger so that you know that you didn't seek reimbursement for it. So as a visual for costs, I know it sounds kind of complicated. This is where accounting gets a little bit advanced, but there is a pretty easy visual. So let me just jump into Cosmolex and give you an example of how legal specific accounting works, because it does matter if you're using a program like QuickBooks or something that's generic. It will function a little bit differently, so you want to make sure that you're using it the correct way. Because this is a legal specific tool, we kind of have a lot of these defaults built in. So for instance, if I go into my settings right here in accounting, these three items, so this is telling my system my hourly matters I'm choosing to book as, I'm going to put it as reimbursable client costs. My fixed fee I'm recording as advanced client cost, and my contingency I'm entering as advanced client cost. This choice should be determined between you and your accountant. However, you don't want to have to think of it every time you're entering a cost. How should it be booked? Maybe you have just a regular timekeeper entering these items. Do you want them to have to think of the general ledger and how things should get posted? So this is very much a set it and forget it. So if I were to enter a direct cost, let's say for an hourly matter. So let me go to my matter list. And I can even select a fixed fee to show the example of that as well. And I go to track time, or sorry, do an expense for my fixed fee case, you'll see down here, it's entered. So in this window, when you're doing your costs, you want to be able to take care of the accounting and billing in one step. So this is where I have my transaction out. It's booked to the general ledger as a client cost. I have very limited options, as you could see here. I don't have a lot of options, just two. And down here is where it gets billed to the client so that those items actually get billed and then you can get reimbursed. So now you're booking the cost. Great. I put it as a hard cost because I know it's a hard cost to my matter. I know it's an advanced client cost. I enter it as that. What about when it gets paid? How does that get handled? So to flip back to our next slide, which is specific to the payment. When you're receiving payment on an invoice, you need to be aware of the order of the allocation. From a billing perspective, all you care is what the balance is, what payment was received. From an accounting perspective, it matters, let's say $800 of that $1,000 invoice got paid. Well, what portions are paid? Is it sales tax, if that's relevant to where you live? Is it the advanced client costs, those are the asset account, the direct hard costs, the soft costs, finance charges, late fees? This is the order in which your invoice payment should go. So if you receive, let's say $500 on a $1,000 invoice, that might only cover your costs. You might not earn any fee on that invoice, and that's very important. General accounting systems will kind of apply proportionally, so you want to make sure that this order is being followed. Now, taking this and talking about the reimbursement of the costs, that's the next slide. So I'm taking the same example, and I'm taking those same four items that we talked about before, filing fees and transcription fees. Those are direct costs. I book them to the expense account, reimbursable client costs, and then the income, when it got reimbursed, it goes to the associated income account, which is reimbursed client costs. Photocopying, that is indirect. So you see that it's posted to an indirect expense account, and then the reimbursement goes to an indirect income expense account. Then the last piece is a non-reimbursable item. I'm not actually billing the client for this. I'm just recording it as non-reimbursable. Therefore, no payment is received towards that. No reimbursement happens. So there is no flip side to that posting. It's just a non-reimbursable, and it continues to tally on that specific account. All right, and I'll pass it on to Liz, and we'll talk about our second principle.
Thanks, Erica. So yeah, class-based accounting, the ability to report on income, expenses, or net profit of a specific class. And I'm going to be very clear about this. A lot of time, general businesses are kind of confused as to what is class-based accounting, and you can only utilize this type of accounting when you're talking about tracking and reporting income or expenses based on separate needs that your business may have. What could be these needs? Well, it could be different locations that you want to track income and expense on. It could be a wholesale business that's utilizing different types of product lines that they want to go ahead and follow and make sure that their bottom line is profitable. Different services that you may be offering, maybe a job, a project, or even for theater companies, shows that they want to be able to see how these shows are running and what profit they're showing. Class-based accounting can definitely be used in different ways. I do want to make one special note on this. Class-based accounting should not be utilized for tracking revenues and expenses for two separate entities or corporations under one general ledger. You want to make sure that you definitely check with your accountant on this, because this is a tricky situation. Sometimes we believe that you can conglomerate two businesses into one and just track them as a class, and that's not necessarily the case. Back to Erica.
Yeah, to add on to that, I actually have a lot of law firm clients that have a separate business. They have maybe a title agency, or they have some consulting business on the side. If it is the same entity, then like you're filing taxes under one umbrella, then sure, it can be under the same general ledger and you can utilize classes. However, that's not typically the case. Usually they're separate entities. So that applies even to law firms. If you have some sort of side business or something else that you focus in, it needs to be on a completely separate general ledger. They should not be commingled in order to get the proper reporting on that. So some other examples for law firms, how class-based accounting could apply. Attorneys or parties. Do you have multiple attorneys in which you want to report on net income? You know, who's bringing in what, or even the expenses. What expenses are being filed under a particular attorney? Area of practice. Are you a general practice, or are you trying something new? Do you know which of your practice areas is most profitable? Maybe it's time to get out of a failing area. You might be thinking that you're doing really, really well, let's say in family law, but maybe your clients aren't actually paying you. You know, maybe you're putting a lot of expenses in, they're not paying you enough to cover those expenses, and therefore you're not making any income. That's something that could really tell a lot of information as to what direction you should take with your practice. And that, by the way, applies to any size firm, whether you're solo or 10 attorneys. If you're a general practice or you dabble in more than one area, that's useful information. Departments. Certain activities will fall into certain categories: marketing, sales, services. Maybe you've been trying a whole different type of lead generation activities, maybe different advertising, different functions. How can you best see where the profit is coming from? And then locations. If your firm has multiple offices or different branches, the tax reporting in that sense is still under one entity. You're not filing separate taxes typically in that situation. But you may want to see the financial breakdown, which area is doing what, being more profitable. And think of this, when we talk about class-based accounting, think of it as, I want to generate a profit and loss for each one of these factors. That's a good way of looking at it. Of course, a balance sheet as well, but if you want to see the net income, nothing to do with your tax reporting. That's everything overall. But if you want to know the net income of your family law work versus your real estate work, that's the idea of class-based accounting. Don't forget your costs. Again, this is about profit, so it's not just recording income in these areas, it's also about, you know, the income versus the expenses. And let's talk about how to track. So when you're thinking about class-based and wondering how to go about doing it, 3 easy steps. 1, you need to define the classes. Every firm is set up differently. You have factors like firm size, the number of specialties you might have, if you have multiple locations or not. they do factor into what is most valuable for you to track. So I do think having a conversation with your accountant, though this is, like I said, not a requirement to do class-based accounting, it's something that could be very helpful for your decision-making process overall. Second, you want to associate items to classes. Let's say you pay $1,000 for advertising. Maybe 60% covered your real estate part of your practice and 40% covered your family law side of a practice. Maybe you ran 2 ads or something similar to that. You can allocate that between 2 classes so that you're accurately capturing the costs that are associated to that. So in addition to having $1,000 tracked as an advertising expense, when you report by class, you're going to see that 600 of that was specifically for real estate. So that's how granular you can get with this. And then after tracking all this information throughout the year, periodically you can then generate reports for each specific class. So like the example I gave, if you wanted to see your income versus expense for real estate, generate a profit and loss by class real estate. But you need to make sure those classes are well defined and they're used throughout your entire accounting process so that those reports are complete. And now let's move on to our third point.
So fee distribution. 3 main factors here, right? Tracking of collected fee by parties. And I just want to start by saying fee distribution is not common in general businesses, okay? There are very few businesses out there that need to really track fee distribution other than law firms. Maybe a funding company, a hedge fund company, they have a fee distribution such as, for example, management fee or an incentive fee distribution that they want to go ahead and track and allocate so they can create an incentive for those who are doing the funds, right? And they give them back a 10 or 20% of the fund profits. It could go as high as 50. But the idea of the incentive fee is to reward the hedge fund manager for a good performance, and its fund performance, it's attractive enough for investors that are willing to pay this fee. So that's definitely one side of it. For general businesses, it's not really common to do fee distribution. But if you're a law firm, you definitely want to go ahead and track that. So not common concept for other businesses, obviously, as we just said. It's very few businesses out there actually track this. And billing and accounting do need to be very closely linked. You definitely want to make sure that you're tracking closely those items that you are billing. Then refer back to how does this affect the other chart of accounts in your P&L, whether it is that you're tracking it by class or by fee. It's definitely something important for you to kind of take a look at that and gather those details, and in your balance sheet to quickly assess and recognize additional items that you should be billing for in your next billing cycle. So specifically for fee distribution, you want to run all of the specific reports based on the fee structure and compare it to your billing reports to get your bottom line and reassess accordingly. And I'll pass it back to Erica.
One interesting point here is it is very true that most other businesses don't follow fee distribution because most businesses don't necessarily reward for income that comes in by party. And that's exactly why most general business accounting tools don't fit this feature. But to talk about why it should be something that you're thinking about. So fee distribution, it's very important to first understand the concept, just in general, for law firms specifically. If you are a solo, you might not be wanting to track this, obviously, because you're more concerned with maybe your practice area, which could be covered by class. But if you're in any type of firm where you have multiple parties, you might have originators, responsible attorneys, various timekeepers, and you want to be able to see who brought in what income. That is not only useful information, but you can compensate on that as well. So the first point, and it's a very important point, is you want to focus on collected fee, not unpaid items, so not what was billed. It needs to be what was paid, but fee. We don't care about expenses that are reimbursed. We don't care about anything other than fee income that was actually earned. So that's the criteria you want to focus on. And then figuring out which parties are actually originating this income, or maybe the timekeepers, the work that they physically do. So to kind of break it down, and every firm's a little bit different, like I said, as to how this concept rolls out. Some have a compensation model, some don't. But the few things to keep in mind is individual's role does matter. I could be an originator for one matter, a responsible attorney for another, and a timekeeper on both. So I could have multiple roles on a specific matter. Now, originating attorneys, maybe they get 10% of what comes in to that matter in income. Maybe the responsible gets 15 and a timekeeper gets 65% of what they actually do. So this actually sounds quite complex, but it can go further. It might vary by client or matter. Maybe for some matters, the getting business in is much harder. So I want to compensate originators more. So originating on one matter might be a different percent than originating on a different matter. So the key is you want to be able to track all of these moving parts, the role, the percentage, the matter, and have an objective calculation. You need to be able to produce a report so that those that are getting compensated can easily see, okay, great, I know how this was calculated, it's fair, the same is applied to everybody else, and I have that every time they run the payroll. So tracking, there's 4 steps involved. First off, if you are currently doing this or trying to do this or your accountant does this, I've heard it's quite difficult if you're not using a tool that specifically focuses on fee distribution. This is very much a legal accounting specific concept. It's similar to a commission structure, a little bit different because you have different parties involved, but general accounting tools can be quite daunting when doing this task. Usually they just export it to Excel and start manipulating and doing manual things themselves. So the 4 steps to keep in mind. One is you need to define those parties. I have John Smith's family law case right now. Who originated? Who's responsible? Maybe there's a work attorney if it's fixed fee. Who are the timekeepers? And what are the percentages? Has that been agreed upon? Is that even applicable in your firm? Is that vary based on party? Very often it does. So then you want to assign those percentages. I'm working on John Smith's family law case, and Erica, she originated. We have an agreement, she gets 5% of all the income that comes in. That has to be assigned to the matter for all the parties. Then you need to compute what the fee collections are. Again, I might have a $1,000 invoice, 500 of which is expenses. Let's see if you can follow me here. 800 was the payment. So I have a $1,000 invoice, half is expense, $800 payment. How much fee is there? $300. That's the amount that should calculate into all of this distribution model. Just that 300, not the full 1,000, not the full 800, not that 500 before, just 300. So you need to be able to calculate what that fee is specifically, and then all of this comes together and a distribution. So let's say Erica, as the originator, gets 10%, $300 was earned, so let me go ahead and cut her that check. That is how the cycle continues. So you could see how the billing and accounting are very, very closely linked, and it factors in a lot to coming up with these numbers. Some of you may be thinking, why would I do this? This is very complicated. It seems a bit intense, but it's a normal way of doing business for law firms, because you want to, very often, you want to have an incentive for the parties that are working on your cases, especially for those who originate. Some of you get matters originated from outside the law firm, maybe outside lawyers. Maybe your neighbor lawyer does a different area of practice and is referring business to you. It's kind of part of how you do like referral bonuses through law firms. So to give a bit of a visual, and then we're going to wrap up our topic today, I think this is very helpful to see because most accounting tools don't handle this type of setup. So if I want to set up a fee allocation for a particular matter, I'm going to go to Jim's case, which I know I have set up already, so I just want to show you how it works. And if I edit this matter, we have a fee allocation area right here. This is where you designate the parties. So very often this is what's missing for most accounting programs. Defining who is the originator, defining who's responsible, or the work attorney, or something else. Maybe you have 2 responsible attorneys, that's okay too. But defining those parties, and if percentages get involved, what is that percentage? That's one step, and in our system, that's really all you need to set up. But to capture that information, and then start billing, start receiving payments, and the system tracks who billed what and what role they have. So if I do a collection report here, I have this fee income allocation report. Let me do it for this year so I get a good amount of information. And you can imagine as we're talking about this, how much calculation takes place. It's true, there is a lot of calculation that takes place. But let me break down what this is. So for particular entries on an invoice, I have the person, the role that they had, billed, let me scroll up so you can see the title, billed fee, just fee. So this is $32.50. This invoice was a lot larger than that, but for Rick, he specifically billed in fee $32.50. He did collect all of it. He gets 65% of that, and therefore it's $21.13 that he gets. That's for one invoice. You can get the summary for all parties on an invoice. You could see for a full matter, for each matter, what was billed in fee, collected in fee, and allocated in fee, and then by party. Myself, as an originator, this is what I billed in fee, this is what I collected, which is not always 100%, and therefore this is what I get allocated. So you get to see overall what takes place, what needs to be calculated. If your accountant is doing this currently or your bookkeeper, ask how they do it, because usually it's done in Excel and it is quite time consuming. So that's a separate conversation that can be had. Okay, so that wraps up our 3 principles, advanced accounting principles. For those who may not be familiar with Cosmolix, like I said in the very beginning, we are a web-based all-in-one application specifically for law firms. One portion, of course, is that legal accounting, but you do have your trust accounting, billing, and practice management in there as well.